Welcome, welcome, welcome. I hope all is well. And today I have a quick chat with you. We're going to go about 15 minutes today. I'm starting something called the 15-minute Business University through the Common Sense Show. And we're going to kind of hit topics, but we're going to hit them in a more condensed time period. So I want you to be able to, on a regular basis, get what we're saying, but I'm going to condense down the information into 15 minutes. And it's called the 15-minute Business University from the Common Sense Show. And we're going to start right now. So your business could be missing out on massive tax deductions this year that go away January 1st. You've probably heard about the Tax Reform Act that was passed during the Trump administration, but a key depreciation provision is about to be reduced by 20% if you don't take advantage of it. No doubt your CPAs know about it, but we want you to know about it as well. I'm Micah Logan, and we're talking tax breaks on the Common Sense Show. All right, so let's get right into it. So we're talking about the tax break for bonus depreciation. So to get started, what I'm going to do first is I'm going to define bonus depreciation. Bonus depreciation is a tax incentive that allows a business to immediately deduct a large percentage of the purchase price of eligible assets, such as machinery, rather than write them off over the useful life of that asset. So bonus depreciation is also known as the additional first year depreciation deduction. So why is this important for you? Well, before this key tax provision was signed into law, depreciation forced you to slowly write the purchase of equipment off over time, in some cases over a few years, many years in case, depending specifically depending on how expensive that specific piece of equipment was. However, with this new with the Tax Cut and Jobs Act that was signed during the Trump administration, what it's done is it escalates the depreciation that you can write down, and you can do 100% depreciation within 1 year, as opposed to kind of dribs and drabs over the course of a few years. Now, here's the thing about the depreciation schedule, which is that the asset, there's a couple things that fit into how this asset is supposed to be used. We're going to talk about that. So using bonus depreciation, you can deduct a certain percentage of the cost of the asset in the first year. That's kind of how it was laid out. For the tax years 2015 to 2017, first year bonus depreciation used to be set at 50%. And so after Trump signed that Tax Cut and Jobs Act, that 50% was changed to 100% in the first year, as I just explained. So it goes into effect for any long-term assets that are placed in service after September 27th, 2017, which was when I believe around the time that this Tax Cut and Job Act was signed. And the 100% bonus depreciation amount remains in effect from September 27th, 2017, so back then, until January 1st, 2023. So you still have time to purchase equipment that you may need. You still have time to purchase not just equipment, but you also have time to purchase whatever equipment that you're going to use in your business that helps you to generate income. So whether that is stove equipment or equipment for construction, or if you're a construction company, or whether that is equipment if you're a hotel chain, whether that is whatever, mixing equipment if you're a bakery. Whatever the equipment is, you have to purchase it, put it in use, basically install it in your business before December 31st, 2022, in order to get 100% tax deduction, 100% depreciation. And you have to obviously ask about it. Um, so I'm sure you're going to have to prove that you purchased it within the time frame or this year. But now is the time. If you don't want that piece of equipment to be depreciated over multiple years, and you want to take it all in 1 year, you can do that, but you have to do it right now. So what happens after January 1st? Well, after January 1st, that bonus depreciation that went from 50 to 100 with the Tax Cut and Job Act goes down by 20% to 80%. So if a piece of equipment costs you $100,000, as of today to the end of December, you can write down the depreciation, the bonus depreciation for the full $100,000 of whatever you purchased. However, beginning next year, that bonus depreciation goes down to 80%. So that $100,000 piece of equipment would now cost you $80,000, and that's in effect for the next year. And then after the year after that, it goes down to 60%, which is December 31st, 2023, then 40, then 20. So it's important for you to understand that this bonus depreciation provision is key if you have a big tax burden this year. If you had one of your best years ever and you need to get a tax break this year, make sure you purchase equipment, bonus depreciated for this year, and get a huge tax saving. So, what I want to do now is I want to talk about what this means for your business and to define some key terms so that you can fully understand what we're talking about. So, let's talk what this means for your business. All right. So, this means for your business that you can take full advantage of Section 179, which is the code in the IRS code, and take that bonus depreciation if you purchase qualifying equipment for your business or qualifying property for your business at any time during the tax year. Unlike with the regular depreciation, you don't have to slowly depreciate it over years. As we mentioned earlier, you can take it fully at one time. So, how do you take it? Well, first and foremost, you have to purchase the property for your business. Secondly, it has to be placed in service. So, what does it mean to be placed in service? It means that the property that you've purchased is placed in service when it's ready and available to be used for its assigned function in your business. So, um, as long as it's available for use, you don't actually have to use the property for business during the year that you take the depreciation. So, let's say that you have a restaurant, okay? You have enough room where you want to replace a stove, and you purchase the stove now, you install it, and for the time being, you're still using the old stove, even though you've installed the new stove. You can still, that is considered placed in service for use. You do not have to actually be using the stove to the right for it to be considered tax deductible. It has to just be installed and available for use. So if you were to call upon that stove to use it as an overflow stove, if you're in a restaurant, then it just means it has to be ready to be used. Now, what does it mean to qualify for this bonus depreciation? Well, a property qualifies for the depreciation if it has what they call a useful life of 20 years or less. So this is pretty much all kinds of business property that you would buy. It also includes software. It does not include real estate property. So if you've purchased software this year, okay, you can, for your business, that actually qualifies for 100% bonus depreciation. Now, what disqualifies a piece of property for this business bonus depreciation is if you purchased it from someone who is, or if you get it from someone who's related to you. It can't be a gift. It can't be inheritance. You have to purchase it from someone who is unrelated to you, and therefore it's free and clear. And it has to last at least 20 years or less. So if it lasts for a year or two, that's fine. It can't last over 20. So that's why real estate is not included. Although there are some key available depreciation mechanisms for real estate, but you should talk to a real estate accountant about what specific aspects of the real estate transactions can be considered for depreciation. Now, under the prior law, you could only use depreciation for new property, but the Tax Cuts and Jobs Act changed that rule, and now you can use bonus depreciation, by the way, for new or used property. That started in 2018. So, by the way, this bonus depreciation is also retroactive. So, as long as you purchase this between the time when the Tax Cuts and Jobs Act was signed and January 1st, 2023, whatever you purchased is eligible for 100% bonus depreciation. And it doesn't matter if it's new, it doesn't matter if it's used. You cannot get it from someone you're related to, it can't be gifted or inherited to you, and then you take the full value of it. It has to be 20 years of useful life or less, and it has to be put in use for service, which means available to use. Now, that is bonus depreciation. You need to jump on this right away. If you made a purchase back in 2019, call it, and you're slowly depreciating it, talk to your CPA and have them accelerate that depreciation only if you really need the tax advantage. And then once you do that, then you should be good to go. You'll see a big tax break in. Yeah, that's about it. So you'll be able to actually have a nice size tax deduction for your business. So that's a wrap for today's episode of The Common Sense Show, our 15-minute business university. Thanks for listening, and thank you for joining me today. If you have questions about bonus depreciation, whether or not it's right for your business, don't call me, speak to your CPA. But don't let this year end without you checking, especially if you need the tax deduction. Make sure you subscribe to the Common Sense Show podcast on Apple Podcasts or wherever you listen to your podcasts. And if you haven't joined our community yet on Facebook, please do. Just search the Common Sense Show. It's a free group. You can go in there with business owners like you who are trying to level up their business. So until next time, if you don't spend time working on your dreams, you will spend time building someone else's. I'm Micah, and I'm out of here. Peace.